Sibos 2017, Building for the Future.
Good morning, everybody.
Good morning.
Day 4 of Sibos, always a fascinating thing to be the first session on day 4 of Sibos after the 4 nights of partying that everybody's been through. So welcome to the session around digitization and trade finance. The question we are debating is it a tough nut to crack? So before we get started and before I introduce the panel, let me introduce myself. My name is Sukand Ramachandran. I'm a partner with BCG. I focus on trade finance globally for BCG. And then a couple of quick points of order, if I may. We're going to use Slido to have some polling questions. So if you have your app, now's a good time to actually go to the polling part of the app, which is on the last page of the bottom right of the app, and then go to conference room 1, please. So I'll give you a few seconds to just get mobilized. It's a good way of getting some interaction in early on a Thursday morning. And then if you, for some reason, don't have the app, you can always go to the website, which is up there on the screen, and participate in the session. So while you're doing that, without much ado, let me introduce the panelists to you, and then we'll get started. So on my left is Piat Manwat. He's from UBS. He heads strategic innovation and market development for corporate and institutional clients at UBS. Next to him is Jari Hanninen. He's from Nokia. He's head of structured finance and trade products for Nokia. Next to him is Liz. Liz Roelson is from State Street. She's an executive vice president and responsible for digital transformation. She heads up the digital transformation initiatives. And then last but not least, from the trade banking side, we have Farooq Siddiqui, Standard Chartered. He heads up trade globally for Standard Chartered. Thank you, panelists, for being here. And to get us going, may I suggest we start with a question? So this also gets your fingers moving and your brains thinking before we start having the discussion. So the question I'd like to pose to the audience is, how would you describe the current state of digitization in trade finance? And there are some 4 options in there. It's very digitized. We think it's just about what it needs to be, like anything else we would expect in wholesale banking. I think there's some opportunity, it's under-digitized. And then finally, we think there's a need to innovate and drive more digitization. So if you go onto your polls and respond, I'll open the poll now. So I think that gives us a clear signal that, so on that basis, I think this is a good point of debate, panelists, to start talking about why do we believe trade finance is significantly under-digitized and why we believe the space to innovate. So if I may start it off, Jari, as the corporate in the room, I think this is a good place to start with you, which is, what do you think digitization means for you? And what would you expect to happen in the industry around digitization?
That's a very good question, and of course, I guess we should actually first define what the digitization means, but I'm not taking that route, so it's a little bit blurred subject also to us. In terms of Nokia, I think this is a very topic issue. This is actually raised also by our CFO as one of the specific items where we are focusing in coming years. And then, in a way, going to trade finance. So I think digitization is, I consider that possibly the automation is like the ultimate target. Everything is automatic, but we are not there, and we are not even yet digitized yet. So I think the different type of solutions where we can actually improve our internal processes by digitization, so those are, let's say, in target for us. In Nokia, so we have been, and specifically regarding the trade finance, so we have been actually selected the multi-bank solution, and we are trying actually to automate our internal process and cut all the, let's say not all, but the significant part of the manual work what we are doing. And that's I guess, and that will also retain as one of the targets going further. We have achieved a lot already. We are using the MT798 messaging with the banks, getting all banks on board, so that took something like, let's say, less than half year. And we consider that was a great success in any case. It was a little bit surprising that the banks were not there yet. I think we heard a lot marketing speech from them, but then when we needed actually to go into that direction, so it took some time.
That's a good segue. So Farooq, what would you think? Well, like, are banks responding to the corporate's need for digitization? How are you thinking about it yourself and for your clients?
Yeah, Srikanth, I think my view is digitization is actually a means to an end. So I think a lot of us get very obsessed with trying to digitize, but I think what we really need to understand is what is the end game. And to my mind, the end game actually is a lot to do with data. And if you think about the applications of where you would use data, whether it is around reducing cost, managing stuff like fraud, actually monetizing data, or collaborating with folks, including your clients, around data, I think we need to kind of focus on what's the end game. And to that extent, if we only talk about digitization as I'm really just going to throw away the paper, I'm going to put it all into some robotic machine which will be all singing, all dancing, I think we are missing the point. So in my opinion, really what we need to then think about is what's the end game organizations are pursuing, number one. Number two is what is it that clients or the marketplace is asking for. Number three is what are some of the challenges that you have today, which in our world that we live in, a lot of it is to do with compliance, fraud, money laundering, etc. How do you actually use some of the tools to address some of that? So in a nutshell, it's mostly about data. Digitization is just a first baby step in that way.
Liz, if I can bring you in as head of digital for a large bank, which is institutional, how do you see this?
Yeah, and I would say, State Street is celebrating its 225th anniversary this year, and like many of both our clients and you, we weren't born digital. So this point, I think, of data and really the analytics and insights that come from the data, whether it's for a new product that you want to sell, for driving your own efficiency or effectiveness, is all critical. And whether it's, at the heart for us, it's about the client experience. We know that our clients have a choice. There's a lot of competition. And for us, it's about the speed, the quality, and the transparency that we give clients in our interactions. So everybody wants to move to near real time. If we take the example of paper inputs, and maybe I'll just give you one example of what we're working on at State Street, is certainly, turning paper inputs to non-paper. We have a fax eradication program. Imagine how difficult this is when you're dealing with thousands of different counterparties to try to get them to send you things in digital form. Certainly, we can apply things like intelligent automation to that effort, but it requires a deep level of coordination and focus. We've made great progress. We've reduced our fax volume on a monthly basis by about 25% over the past year. But there's a tremendous amount of work to do. You cannot get to real-time data, analytics, and insight if you still get a fax that you have to validate a signature on, do the KYC and AML checks on. It's impossible. So for us, it's starting with very small things like that, but certainly much bigger efforts as well. But this combination of process reengineering, the people that handle the processes today, changing how and what they do, as well as the technology that makes a difference.
Thank you, Liz. Beat, can I bring you in with your role on innovation? How do you think about this?
Yeah, sure, thank you. At UBS, we're actually looking at trade finance as like really multifaceted business, particularly if you look at the corporates we're serving that starts from the small corporate around the corner up to the big multinational company. And of course, they're all having different needs in terms of how to manage trade finance. So basically, as UBS, we were one of the really early adopters of Swift MT 7988 as well. So that's fully straight-through processing. We also looked at electronic document presentation, and also, of course, for the smaller size corporates, to make their life more digital in terms of getting them a more intuitive and an easier process to do trade. But like I said, trade, it has many different aspects. So there is no one-size-fits-all to approach the digitization of trade. So at the moment, we're looking kind of to resolve pain points for the respective customers, which are right now existing, but we also have a project which we launched with a group of different international banks, how to actually look at trade in a new way and resolving pain points for clients. And that we have actually been working on for the past few months, and it really looks at getting actually the use case responded in a different way, because eventually you really have to resolve the end-to-end transaction flows of the corporates, make that more efficient. And then we think there is really the ultimate value in digitizing that business.
I think that's a very good segue to go to the next question in the poll, if we may, because one of the key questions when we talked about digitization, we're always wondering is who's driving this and who's expected to drive this. So if I bring on the next question in the poll, is it the corporates who are eventually the beneficiaries at the end of the day, and they are the people who are creating the trade transactions in the first place? Is it the banks who are the facilitators? Can regulators be the catalysts of change? Or is it sort of, nobody really cares about it, or all of them care about it? So again, if you open the poll, and in the meantime, while you're answering the poll, can I say that you can also pose questions to the panel. So on your mobile apps, you can actually have a section where you can ask questions. So if you were to post any questions while we're having the discussion, I would encourage you to post the questions, and we will pass that on to the relevant panel members as we go along. So the conclusion clearly seems to be that I think the industry as a whole needs to find some element of cooperation and coordination around this. What do we think? Liz, do you want to start?
Yeah, I would say, listen, everybody has a digitization program very similar to State Street, whether it's corporates, banks, we deal with a lot of asset managers, asset owners, sovereign wealth funds, et cetera. Everybody has a digitization program. I think it's the size, scale, shape, time horizon that varies. Also, the history matters a lot. So an example of what we've done is over the past 10 years, we've been creating things like shared services, centers of excellence. When you do that, you already have a good platform to launch your digitization effort from. It's very difficult, I think, when you have a very distributed process, one that doesn't already have some standardization in place. I think everybody is looking for efficiency and effectiveness. Again, in those speed, the quality, that real-time view of data, the analytics and insight to really make decisions. So I think everyone has a role to play. Interesting, I think regulators play a critical part in this. From our perspective, I think regulators, certainly in the US, have taken a keen interest, not only in their own digitization effort, which they have to do, whether they be auditors, regulators, or other, but also in understanding and making sure that we understand the risks that are associated with processes and workflows that we're digitizing, what the controls were that we have in place, both before and after, and how we can demonstrate to them that the risk isn't more. To me, when we're taking out manual intervention in a process, we have less risk. But it's that transition. How do we know, and how do we make sure, again, we have new, if not better, controls in place after we digitize, has been a critical focus with us and the regulatory bodies that we interact with.
Jari, can I bring you in onto this one? Do you actually believe that all parties can coordinate, cooperate, and what do you see as the recipient of all of that?
Yeah, I think all parties are having a little bit different approach, and I think that also it has taken a little bit of time, and things like blockchain are, let's say, possibly in the beginning was quite a lot of confusion actually what it's all about, and I think how I consider at the moment is it's more like one technology solution and nothing more than that. But then there needs to happen actually quite a lot in between. And how do we then are able to cooperate between these different parties? These may vary, of course, in different parts of the world as well, according to my understanding. So there's a lot of things happening in Asia at the moment in this field, coming from Nordic countries. So there's a lot of cooperation there, together with the banks, the corporates and the banks together even. And I think people are seeing that you have to take actually your hat off, let's say your professional hat, where you're actually employed. But rather try to find the ways how we can actually do together something which is mutually beneficial for the parties. and people actually in the corporation, they are not investing unless there's a value add for them. It's very difficult actually to get these type of issues through. On the other hand, so when the value add is actually considered in the beginning correctly, most likely the benefits are much higher at the end of the day, what you have been actually in the beginning considering.
Can I weave in a question which has come here into that, and this might come to you, Faruk, given that you mentioned Asia might be a place where there's innovation happening in this space. Apple yesterday at Cybos said it's all going to be about user experience. So when you think about a market like Asia, which is not necessarily homogeneous, you can think about some element of homogeneity in the European context, but Asia is quite different with languages and everything else being very different and infrastructure being at different stages of evolution. How do you think about that, bringing in a user experience while creating innovation in a vast market like Asia, where you clearly are the better position of the panelists given your experience there?
Yeah, I mean, I'll give you a few examples. Everybody's aware of the classical example out of Kenya, what happened on the mobile side with M-Pesa. And I mean, they were the first country actually to do something on the mobile in terms of moving the entire collection payments on it. And what really drove that? And I think what drove that is that if you're living in their case, a technology which is say landline or fixed line, and you suddenly leapfrog 3-4 generations of mobile technology, you are really at the cutting edge. And that's what we are seeing in a number of markets in Asia. So if I take specific examples out of China and India. So if you take China as a case in point where you see the whole proliferation of platforms coming in, and the platforms are doing a bunch of stuff. So while you read the headline news on what Alibaba and Tencent are doing, you read about how they are forming financing companies on the back of their own database models. What you're also seeing is a number of companies come through on things to do with P2P, things to do with customer convenience. Similarly, if you take a market like India where post-demonetization, you're seeing a number of initiatives. They call it UPI, IMPS, which is a lot to do on the payment side, and you see that now translating into other areas as well. So I think one is the hunger to innovate, I think, is felt a lot more because you're really trying to leapfrog generations of technology. And I think also what is driving some of the innovation there is actually the regulators. I think one point was made around how do regulators influence the introduction of new technologies or new platforms. And I think Singapore and Hong Kong are actually really good examples of where, if you take Singapore, and some of you in the room are well associated with some of the projects happening where they're trying to bring all the parties onto a common platform. And some of the big drivers for them is, how do I get SMEs access to finance? How do I control stuff like AML in a large trading economy? How do I reduce the cost of financing for the smaller guys in the chain? So that's a big drive in terms of saying, A, they want a lot more financial inclusion, and technology actually from a regulatory perspective is seen as a big enabler for financial inclusion. So while we sit, say from a West perspective, it doesn't really strike home what's the point, but the key thing that we see is around how does technology help financial inclusion? How does technology enable SMEs to come on board? How does technology help reduce the cost and create that community? So I think some of that is the underlying demographic drivers which is causing a lot of these new technologies to be adopted in the context of what we do today.
So that's potentially a very good segue to go towards exploring what's happening when there is growth in some of these markets. So those of you who haven't seen this, Swift has just released a white paper with us this morning, and a lot of the focus in there is about the explosion of data which is happening in there. So while we switch to the next poll, we want to focus on what's happening with a recent report from ADB which talks about the fact that there's a huge SME opportunity which is unbanked. Faruk's point here about the fact that there is going to be an explosion of new players coming into this space. And then status quo, where we find that there's something like 98% of the data which is actually captured on trade is not value additive. Mm-hmm. And then if you double or quadruple with this, with all the SMEs coming into play, we are creating a lot of waste. How do you eliminate that to focus on that? So if I may start the next poll. So the key question here is, we're focusing a lot around data as we think about the move of what's driving in digitization. And the question to the audience is, would focusing on getting the key data elements agreed and streamlined help digitization? Is it going to shift the mindset from being very much around paper digitization as it's today to a world where we're focusing on the data elements rather than on the paper? Well, I'm glad there is at least agreement that data is important, and at least the white paper that we've released with Swift at least has some standing on this one. So thank you for that. So Farooq, you started off with data, so I want to come back to you on this one, and then we'll explore with the rest of the team. Because in your opening statement, you said very much data is the core of getting this right. Where do you see the challenge with how we are handling data today, and where do you think we need to get better?
Sorry, I'm just looking at the answers, and I do want to pick up on, nobody's picked up on the last one, which is there are other issues that need to be tackled first. And I think one big soft issue that at least I see is we get very hung up on the technology, but there's a big soft issue, which is really around what I think is around the organizational construct to do stuff with new technology, as well as the cultural challenge of adopting to a completely new style of working. And I think it's like, you give a new tool or a new toy to a kid, and you suddenly expect the guy to be able to play with that toy. But often the people actually don't know how to play with the toy. So in many cases, the impact of digitization is muted because you've not made parallel changes to your organization structure, nor have you kill some of the white elephants which are looming around, which is preventing the use of data and going fully digital. So I think I just wanted to make that point. I think the point around data, if I were to break it up into 3-4 parts, the first part is what do clients really want? And I think with clients, depending on the type of client you're talking of, you're seeing their business models getting impacted dramatically. So whether it is moving from bricks to bricks to clicks, whether it is around the fact that certain parts of their businesses are completely getting outsourced, or for that matter, some of the businesses are starting to go cross-border. So I think one element is trying to understand what the shift in their own business model is, and therefore what are the new needs that are coming up. So that whole understanding of the client and routing your own data and digital journey in terms of understanding that client space very well. I think the second, which we haven't really spoken about, is the marketplace itself. So marketplace, when you think about why do you have so many people coming and, so to speak, eating the banker's lunch or trying to eat the lunch, which is really, you've got inherent inefficiencies, or there are certain implicit needs of the client that you haven't really addressed, which is why you see such a large proliferation of people coming in, trying to solve specific problems. So I think the understanding of what are those problems that they're trying to solve, and I think having the humility to acknowledge that these guys, some of what they're doing is actually the right thing, and then trying to figure out how do you kind of come up with a compete, collaborate, cooperate, co-create kind of model which will help you manage that marketplace better. And I think the last one, which I mentioned briefly, is really the one about the regulatory push in a number of markets, which is driving adoption on these technologies.
Yeah, do you want to come in? I'll come around to this.
Yeah, I can just fully support that. And also I think the importance here is about, it's not just about the data, it's effectively about the interoperability. Because if you look, where does this industry have been really good at? It was like breaking down processes in sub-processes, but each process actually asking for even more data. So we actually gotten to a state in the industry where you have an increased complexity and data depth. And this is exactly what has hindered the efficiency. And if you now look at the use case or the customer requirements, like large corporates, they want efficiency, they want automation. Small corporates, it has to be simple. Mm-hmm. They really need to get access to security and to financing. But if you're not getting the process efficiently done together, none of them has eventually the benefits. And this is exactly where, in my opinion, like interoperability and platforms have to be key, that all the different stakeholders, they have to collaborate, because eventually if you talk to clients, if you talk to logistics corporates or also to customs authorities, the pain point and the struggle is exactly the same. They're all fighting to get the same set of information, which even worse, they exchange on paper. So I think the key hurdle in this industry is that all different stakeholders, they really have to get together. They have to ensure the interoperability. And if you unlock that part, there is a massive potential to actually get financial inclusions for SMEs and to get efficiencies for large corporates. But it has to be done together. Mm.
But I think no matter what, we have a great opportunity. Each one of us in the value chain has an opportunity to do something more than we're doing today in the digital space. Absolutely. So although I would balance that with, yes, we need the interoperability and the coordination across different players, but all of us have work to do, and how you balance those two things. I think you can make considerable progress as an individual piece of the value stream, while at the same time working to coordinate. You know, we had a slightly different problem at State Street to your 85% of data being not necessary for the transaction. What we were actually finding is, from the start, we're taking in a lot of data. We're dropping the data as different products and solutions get created, and being part of a larger financial institution, trade finance being one type of service you might provide, it's better to think of it in a systemic way. So what we were finding is, if we provided custody services, if we provided banking, whatever we started with is really where our data needs generated from. And we didn't think about all the other products and solutions we may have been selling to our clients. And looking at the relationship in a holistic way has also been quite instrumental around how we think about digitization and that interaction with the client. Less about the user experience, like Apple talked about yesterday, that's coming, but if you don't have great data, you can have the nicest user experience you want, and it's not useful.
To build on that, I'll come to you, Jari, but there's also a question here which is around, data and digital is all about sort of managed transparency. And so how does that have the potential to improve the experience, especially from your perspective, whether you're an importer or an exporter? Because a lot of this eventually has to come down to what you care about as a corporate, which is your experience, your transparency, and an ability to connect and do things faster. So what do you think?
Yeah, it's basically this this whole digitization is actually something that, as has been actually described here, is that really we need to actually work together and possibly reconsider some processes as well, and consider end-to-end. And also, in a way, this what can we do together in order to find the best ways? Because from our side, of course, the key issue is that how can we make our own, let's say, processes more efficient, and there this type of, in a way, capabilities. So who can actually provide these capabilities in order to utilize actually this type of electronic data, and so. For instance, regarding this digitization, so I can possibly describe that how far we are if we consider, for instance, letter of credit as one example. So we are in project business, so of course one presentation can actually weigh several kilograms. So we are quite far from digitization in that regard, and therefore we really need to possibly consider as well how we can find the better ways to do. One issue is, of course, especially once again regarding letter of credit, is that what can be actually done in cooperation on the ICC side, and I don't believe that there will be actually very quick changes in this regard. What comes to the processes and what are basically the elements of trade finance as such. On the other hand, as was actually commented, so I think we all need to consider what can we actually do in this front.
So on that point, can I come back on a question that is related to a question here, which is increasingly also there is a compliance angle to it in terms of just the risks associated with trade and the regulators, for lack of a better word, using the banks as a means to clamp down on financial crime, with an element of extraterritoriality coming through via the execution through banks. So the question is, should the regulators work with supranational bodies like SWIFT, like ICC, to come up with some standards? I don't know if it's data standards or whether it is some version of EU CP or whatever makes life easier.
Yeah, I think it's self-obvious actually from my point of view, because who are the parties who have leverage actually in this regard? So when we are talking about know your customer, this type of issues, so I think in a way the instances mentioning already ICC or SWIFT and this type, but also banks together as well. So I think in a way we as the corporate, so we are facing a lot of different type of data requests from the banking side, but also what could be actually done there to harmonize this type of, let's say, data need.
I mean, I just think, where have we seen regulators coordinate to come up with one solution? Frankly, I don't think we have. If someone can name one, great. I think their rates and paces are very different. Just even think post the financial crisis, whether that's the Dodd-Frank work or Basel or other, their needs and rates and paces, again, very similar to corporates, are very different. I think it's a nice thing to think about, and I think we shouldn't stop sort of pushing them to come together. However, waiting for them, I think, is a challenge, and again, haven't seen great examples of that in the past work.
I think that might be a good segue into the next question for the audience. Would love to get the audience input on what they think about this topic. So if you go to the next poll, please. So the question I want to say is, like, again, we don't want to name anybody as to who we think should have the accountability. Let's call it an industry body. If you were to agree, at least to a sufficient degree, data standards and interoperability, is there a belief that the thesis we are talking about today, digitization in trade finance, would that increase or not? And the answers are really around a scale of, yes, it's the lack of standards which is driving it. I think it needs other factors like Farouk talked about, or basically there are other important factors which are more definitive rather than just the data standards. So if we open the poll now, please. I think that's a cue for us to figure out that it may not be just standards and interoperability, there may be other factors. So we'd love to go around the panel and figure out what the other factors might be. I think Farouk, you started off with people and culture as one of the topics last time. So if I start this end, what might be other factors you think about when to drive digitization?
Yeah, actually would like to link this question to a statement from Liz before, where she was referring to the project about dropping 85% of the data. And I think that will be a similar approach we have to apply here, because there's so many stakeholders in trade connected. I think if you want to bring them all on one single global standard, that's never going to work, because everyone has to invest so much money into existing systems and platforms. Like, kind of the entrance hurdle is much too high. I think the key point how we can get this resolved is what is the critical information we need among the different stakeholders to fulfill the end-to-end transaction, but also the different needs of each stakeholder, like for example for logistics company to commission the transportation cycle, but also for customs to do the clearance, or for banks to fulfill the AML part. So from my point of view, you need to agree on a certain base which can interact with the different stakeholders. And if you achieve that, then I think every one of the stakeholders actually gets a value out of that without having to turn their own systems upside down. And I think this is particularly critical, that the industry can get together and agree on, like you can say, kind of sort of a fabric which holds them together in order to unlock the incremental potential of everyone. But I don't think we can turn it completely upside down. And I think also history has shown that just simply hasn't worked.
Gary, up to you.
Yeah, I think that, of course, in a way, due to this end-to-end process considerations, so we possibly need to also create new standards, and how that happens. So through this collaboration actually between different parties, and when there are, let's say, sufficient number of corporates and the banks who are actually starting to do something together with these digitized platforms and with the technology available. So I think in a way that is starting to create a standard as well. But there are so many, let's say obstacles when it comes to trade finance in this regard, that I think we need not to wait the perfect solution created by somebody, but try to do together something to create new standards and harmonize the whole end-to-end process as such.
Okay. Farouk, I'm going to give you a question which has come in from the audience, which is, as we talk about data, more data dramatically increases the sanction screening back office requirements. How do we solve that challenge?
I think in the world that we live in, the reality is that this is a way necessary, and I think actually a competitive advantage for a number of organizations who can manage this aspect around financial crime compliance really well. I think to the extent that in some way, if you're intelligently able to organize your data and develop various scenarios around frauds, AML, etc., it gives you a bit more understanding of what's happening. But I think increasingly, if I were to tackle it from a slightly different lens, one basic issue that we have in this context is that the whole concept of KYC and the whole concept of the smaller SMEs kind of getting excluded is primarily because people don't really know who these guys are, what are the antecedents, how do you establish their credit profile, et cetera, et cetera. So I think to the extent that data can help unlock some of that understanding, and you link it back to the point you made about the ADB's latest report of a $1.6 trillion global trade finance gap, of which a big chunk of it is primarily because people or the banks don't have a really good insight into the actual SME client in terms of the KYC. So yes, it will impose a lot more obligation on the banks, but I think if you're able to deploy a bunch of smart tools which are already kind of getting created, you will help solve that problem. I think the second thing which we see a lot of companies with big global cross-border supply chains actually doing is putting the entire community of suppliers or buyers increasingly together. So if you think about sectors like retailing, think about auto, you think about even technology sectors going in between the US, Taiwan, Korea, China, you're increasingly seeing those supply chains coming much more closer together, being driven often by one of the big anchor players within that supply chain. And what that halo effect of that supply chain really does is that it allows all of the parties to better understand both the risks within the supply chain as well as understand what the counterparties are. And at times even therefore drive that, what I would call a closed loop digitization across all of these players in a much holistic way. So that's some of the responses that we are seeing.
Yeah, if I may add one point to that, which I think is very important. You're mentioning the SMEs, which are suppliers to large corporates being in jurisdictions where like a supply chain finance program and provider is not present or the bank is not present. And it's particularly the lack of information or the lack of trust of the suppliers which are locking them out of the cycle. And that, I think, plays very well in the ecosystem or the platform thought, because if you can link those parts together, you can link someone into the ecosystem which knows that local supplier. They can basically run through the AML process or the KYC process and grant them access to the ecosystem. And that is, in my opinion, one critical point, how you get that financial inclusion of these corporates which are currently not in the entire cycle.
Liz, were you going to add something?
I mean, I was just going to add, again, the people and process component to this, because I think we are and do look at some of these things in a very incremental way. And I've even said it in my responses, what can we do both internally and with smaller parts of the ecosystem? But I think also how to bring in people that can really disrupt our way of thinking, just because the ways in which we've thought about it in the past haven't been successful. Are we really being inclusive? Are we bringing in new people onto our teams that can challenge the way we've thought about solving the problem before? So not only doing that, but thinking about how that transforms our workforce in the future. So the people and process component, if we're thinking about just digitizing the process as it stands today, what does that really drive for us? It drives some efficiency. It's really how do we create a disruptive model in the industry. So needs for us to think about paths that we may not have considered before. So just really thinking about your talent pool and who you've attracted and looked to for your innovation, I think is important.
Can I just take it to another question which has come in from the audience, which is, I think all of you have at some various points in time mentioned ecosystems and closed loop systems of solving for it in that space. I guess the concern is really, if you think about all of these initiatives, I suspect all of us have limited resources, investment dollars. How do you prioritize where to focus on? Is there just too many things going on? Should there be some need to just focus down on a few things which are going to move the needle more? And is the answer going to be different for different players, in which case we'll never get cooperation?
Yeah. I mean, I think you always have a lot going on. We hear from our team, what's the priority? In my program, I have over 100 different initiatives. spending hundreds of $millions this year and for the next 5 years on digitization, as an example. We set our priority based on what our client and that user experience is about, and I just don't mean the UI. It's all the inputs to make sure that when they have the experience, that it is the best possible experience for our clients. They care about speed, getting to real time, exception-based intervention, and the kind of like FedEx-like transparency for our processes that you get from tracking your package. I mean, those are the kinds of things that our clients care about most. What you need to do that is all the things underneath that to make that a reality. So everything from my fax eradication example, it's impossible to get real time when a fax takes us nearly 12 hours to process because we have to validate a signature on a signature list, because we've got to input it, we've got someone else that has to verify it, the KYC and other AML requirements that we have. So really what we're doing is listening to our customers, what they care about most, and aligning. And our customers are actually more homogenous globally than we probably give them credit for. They're all looking for effectiveness, efficiency, again, speed, quality, and transparency. The regulators are looking for the same from them, and for us as an example. So I find much greater alignment across stakeholders than differences.
Can I bring you in? Prioritization,
Yeah.
focus, where would you want everybody to focus on?
Yeah, I think Liz actually summarized those very well. So what comes to transparency or effectiveness, efficiencies, and so on. So, of course, the tricky thing is that you don't know what the future is. And I think in a way, at least from the corporate side of view, we need to consider what our internal process is and how then different type of solutions can add value into that. On the other hand, so I think in this type of projects, what comes to actually trade finance and where we should actually develop, so we have been thinking that in a way it would be better actually to cooperate with some type of standard solutions which are already actually in the market and who are then actually considering which way to go going further, rather than, let's say, investing ourselves to something which we would need to develop ourselves. And with this standardization in that regard, that we would in a way select standard solutions and consider how we can then, and we are also sharing, we are discussing actually with the other corporates as well, what are their thoughts and where should we actually go together as well, because in a way how we can then put pressure also on this type of companies who are developing these issues and so that in a way those are supporting not only some, let's say, very clear-cut, let's say, more simple business, off-the-shelf business, but also project business where we are.
I think just as we bring it home, can I just get the audience input on what they think the prioritization should be, and then I'll go around the panelists to get their final thoughts, and then we'll open up for questions. So if you open up the poll, please. So the question is, what is the most important topic for global trade to tackle in the next 2 to 3 years? Clearly, we've heard the questions come in from the audience around compliance. We started talking about the data, standards. We're sitting at Sibos. Obviously, there's a lot of solutions coming from SWIFT. Do we need to be deploying those solutions, or should we focus on digitization of paper within banking? So if I open the poll now. It's quite a mix.
Yeah.
It's almost like I think the desire is if we could solve all of it simultaneously.
Yeah, I was just thinking that possibly I would have actually selected all if you would have that.
But we are doing a lot of that,
Yeah.
simultaneously. When I look at it, when you take paper in, you have to understand what the data is, who needs it, and where it's going. So at the same time, you're sorting out the data, at least internally, and in some cases, working with others to do this. At the same time, we may be deploying sort of current automation solutions or historic. We're also looking at new technologies and new standards. So whether it's how we can use distributed ledger technology to make our processes more efficient, or how we use robotics to solve some of the things that we're doing, as an example, Those are all things that we're doing at the same time. As you look at the business problem, what are the uses? What are the time horizons? What are the cost implications? What are the trade-offs that you're making? So I don't think you look at any one in isolation.
Okay.
I think my view, some of this is existential. Okay, it's not nice to do, you got to do it or you're going to die. Sooner or later you're going to die. So some of it has to be done. I think the more interesting question is, where does your own, as a bank, business model then evolve to? So if you kind of take a very simplistic assumption that the way you make money today, your current fee lines are all kind of going to disappear, how are you going to make money? In a business like trade, with the capital models that we've got, with some of the high cost income ratio that we see with the banks, why would you want to run a business which is not profitable? So I think, therefore, discovering what will be your new business model. It might be linked to data, it might be linked to a specific niche that you want to play in, but so I think it's really going to be about choosing the battle and the battlefield that you want to really play in. So some of this, I think, has to be done, but this is not it. There has to be something more to it.
Yes, Beat?
Yeah, so I think so. And also when we look at UBS, how are we approaching it? We're also running it with a portfolio approach. So we're trying to resolve, let's say, issues which we can make better on a short-term basis. But it's multi-different angles which play together. And particularly if you looked at banks getting rid of paper, well, if you automate that with scanning and AI, you still are based on a broken process. You're not helping the corporates. You still have to fill out the paper. We have to complete the paper. You have to run the AML process. It's just because I put the machine in it, it's not getting better. And that is, I think, what Farouk also was referring to. You have to look at the business model change, which can actually happen if you take new enablers such as blockchain technology or AI and like common data standards. Then suddenly you can actually get a different business model, which also, in my opinion, you can actually make transactions much more effective than it is right now. Because also we are not processing paper because we like it, but because you have to do it. And also we are all trying to get the cost down of it. So if you really can get the cost down with a disruptive approach, I think then everyone in the end will cheer about that.
Thierry, we'll give you the last word before we open up for questions.
Yeah, I think I would have actually selected all of those, and basically, I think in a way, corporations need to actually consider from their part in a way, what is the way actually to go further. But on the other hand, also understand whether let's say the development actually in a more general level is going. I think there is no shortcut. We just need to do our work, all of us, and collaborate. And I think what blockchain actually did is that it was like a waking up this trade finance discussion and how should we actually develop this further. I'm not, let's say, sure whether blockchain will, as such, will actually solve the issue, but it can be, let's say, a significant part of that, in case we can actually find the solutions how to utilize it.
Very good. I think if we may open up for questions from the audience, but while we are getting the microphone set up, can I ask one which came in electronically? And the question is, we saw Maersk do their own trade finance digitally. Don't banks have to keep up with the corporate demand to make digital trade finance happen, or are you going to lose the business? Who wants to take that one?
I think it's a classical case of, if you're not part of the disruption, you'll get excluded and you're going to be left behind. So I think the answer is rhetorical. You've got to be in it.
Any questions from the audience? If you want to just raise your hand, we'll come through to you. Otherwise, I'll switch to a couple more digital questions which are here. Anybody? Or is it that sort of the Thursday morning effect? While you're thinking about that, let me ask the next question in there. I think this came in quite early, but I wanted to hold it back for the end, which is, there are several stakeholders involved in trade, insurance, logistics, government organizations. Is banking the right place to start for the digitization process, or should we try and find a way of getting more parts of this digitized? Who wants to take that?
I think banks are already working, again, on their own digitization effort. If you don't do trade finance first, it might be 10th on your list. It's going to come. Banks need to improve the efficiency and effectiveness of what they're doing, again, to better serve their clients. Clients have a lot of choice. We are not the only choice that they have. And that competition is really what's driving us to do these things. So again, it may be number 10 on the list rather than first, but they will not stop. So would another player or participant or key stakeholder take the lead in the interim? May be the case, but I think banks are already sort of drinking the Kool-Aid. It will happen. That's my...
Any other views?
Yeah, I think in a way banks have, of course, invested a lot actually in different type of development in this area, and possibly what they could actually do is that also cooperate together in order to let's say, find possibly the most likely approach going further, because all of us, we are guessing in a way what the future is. But on the other hand, I don't consider that I think the banks shouldn't be scared about this situation. They just need to in a way cooperate also with the fintechs and the in a way the corporates who are active in this field, and also consider that in a way should they invest by themselves or should they actually cooperate together between the banks. I know the challenge is there, but or then actually utilizing the capabilities of the other corporates actually active in this field.
Actually, any other questions from the audience? Although I've got one more question here. No? Go on. There's a question from the front here.
Okay. Hearing all the comments regarding the different problems about standards in the different banks and vendors and fintechs, my thought is, again, trying to understand why not banks, which are the members of the SWIFT company, can press SWIFT in order to start some kind of standardization of the trade finance products and payments. I don't understand why not.
Anybody on the SWIFT board or something like that?
Yeah,
I think we've got members of SWIFT here. We should ask them.
But like,
yeah.
No, but I do wonder, just prioritization. What is their type? Just like us, we have limited resources, right? And what are we going to prioritize first? And I do wonder if it's one of the key reasons is that. Certainly, there's a role for them to play, but what is more impactful to them and their members?
Yeah, I think, and we've been discussing this with SWIFT, and I think that they are actually looking at quite a bit of it. But I think we all agree that partly the reason why we see so many consortiums kind of coming up is actually trying to get into that vacuum that nobody's really doing, which is really how do you have a common rail set up, how do you have common standards, what kind of legal framework do you put on it so that people can recognize what you're doing. So I think someone will crack it. So whether it is SWIFT or a consortium, but I think some of it is going to happen soon.
can I just test one? It's just my 25 years of experience in this industry and an element of cynicism which I have with consortia, because I've been lucky and unlucky is the best way to describe it. I've been part of 9 attempts at big consortia being formed by banks. Right? That started from CLS. We've been part of Bolero. And I've been part of the journey for so long. The average time, and then this is a data which we've actually tracked as a consulting firm, which is the average time for a consortium to get to minimum efficient scale is 5.5 years in the past 19 consortia that we've looked at. Now, that's not to say the next one's not going to take that long. Maybe something's changed in the world. I know the history is not a reflection of the future. The world is changing, but the history of banks creating consortia for trade isn't necessarily filled with a lot of success. So the question is really, what's going to be different this time?
I think times are different. Maybe not being in trade finance for that long, I have a bit more, hope still to get it done. But I think times have changed. I think the competitive pressure and also the collaborative spirit is different than it just used to be 2 years ago or 3 years ago. And kind of how you would approach it best is, I still think there needs to be some nucleus kind of pushing ahead, trying to come up with an approach how to resolve the problem, but that has to come fast and has to come in an agile way. And Of course, as you get along, there will be more parties needed to come together, but I think it has to be the ones which are truly affected by it. Because if you look, for example, at like SEPA within Europe, which is actually a great idea, we get a common standard, but in the end, we ended up every country having somewhat different implementations of it. And who is in the end suffering again? It's corporates or it's bank, because they have to tackle all the differences. I think there needs to be a collaborative approach, getting together fast and gaining momentum. And then I think there is a chance to actually do it. It still will take its time, but I think it will take less time than other initiatives.
I don't want to sound like a prophet of doom, but I do feel that the reality is that our current business model, the way we do stuff, is going out of fashion. And I think what will drive banks or a combination of banks and fintechs to work together is this whole need to survive. I think some of us will probably pick it up earlier. Some of us might encounter it while it's too late. But I think what's changing now is that we just can't be sitting and can't just be status quo. So whether the question really is, are we doing the right thing? Is the consortium the right way to go? Is existing kind of a community that you already have the right piece to leverage on? Is it about having a small private club of the bigger guys to do it? Who knows? But I think the fact is that you can't kind of perpetuate the status quo that some of us believe will just kind of persist.
Yeah, I think things are changing so rapidly in today's world that the time is of the essence, definitely. And I don't know enough about SWIFT in order to be, let's say, wise here. But I reckon the problem is that if there's a consortium of banks, and many of those, so what is their initial authority? Can they actually start to act by themselves and then let's say, propose something for approval by the banks, or I don't know how this works. It's a little bit similar phenomenon actually in the ICC. And what we have been trying to do in Finland at the moment is that not only focusing on the nitty-gritty details and fields of LCs, which is quite typical actually what is discussed in ICC. So we are having this type of digitization discussions with ICC, only with corporates, and then the other one is with the bank on the banking side. So regarding the future of trade finance, and we are trying actually to put pressure on them through the ICC to let's say global level as well.
Thank you very much. Anybody with a final thought or final questions? If not, I'd like to thank the panel, Farouk, Les, Jari, and Beat. Really appreciate you coming here, and especially being perky on a Thursday morning. Thank you very much.
Thank you.
Yeah.
Thank you.